we are diving into term life insurance fundamentals for the national portion of the life insurance exam. Term life insurance is often called pure life insurance because it provides a death benefit for a specific period of time and nothing else. On your exam, the most important characteristic to remember is that term insurance has no cash value and no investment component. It is strictly a contract where the insurer pays a death benefit if the insured dies during the specified term. If the insured survives the term, the coverage simply ends with no residual value. You will see questions comparing term to whole life insurance, and the exam expects you to know that term offers the largest amount of coverage for the lowest initial premium. This makes it ideal for young families or individuals with high temporary needs but limited budgets. The exam frequently tests the different types of term policies based on how the death benefit changes. Level term is the most common, where the death benefit remains the same throughout the entire policy period. Most level term policies also feature a level premium, meaning the cost does not change during the 10, 20, or 30-year period. Then, there is decreasing term insurance, which is a favorite exam topic. In a decreasing term policy, the death benefit goes down over time, usually to zero by the end of the term, while the premium remains level. This is almost always tested in the context of mortgage protection, because as the mortgage balance decreases, the need for insurance decreases accordingly. Conversely, increasing term insurance sees the death benefit grow over time, often used as a rider to keep up with inflation or to return premiums. You should also be prepared for questions regarding annual renewable term, often abbreviated as ART. This is a form of level term insurance where the death benefit remains constant, but the policy is renewed every year without evidence of insurability. The trap here is the premium. In an ART policy, the premium increases every single year because it is based on the insured's increasing age. This is the purest form of term insurance and represents the lowest cost for a one-year period of protection. Another critical exam area is the duration of the policy. Policies are typically written for specific years or up to a specific age, like age 65. You must understand the renewable and convertible provisions. Renewability allows the policy owner to continue coverage at the end of the term without proving insurability. But the catch is that the premium will increase based on the insured's attained age at the time of renewal. Attained age is a key term to look for because the insurance company will calculate the new rate based on how old the person is when they renew, not when they first bought the policy. Convertibility allows the policy owner to change the term policy into a permanent policy like whole life without a medical exam. The exam will try to trick you by suggesting that premiums stay the same upon renewal or that you need a physical to convert, but both are false. One common trap involves the phrase living benefits. Term insurance provides no living benefits because there is no cash value to borrow against or withdraw. If a question asks which policy provides a death benefit but no living benefits, term insurance is your answer. Also, watch out for wording regarding pure protection. This is synonymous with term insurance. A helpful way to remember the core nature of this product is the phrase, term is for a time. This reminds you that it is temporary, has a fixed end date, and does not last your entire life like permanent insurance does. Finally, remember that while term is the least expensive initially, it becomes prohibitively expensive at older ages. If an exam question describes a client who wants lifetime coverage or an investment component, term is the wrong answer. Term is strictly for temporary needs or those seeking the maximum death benefit for the fewest dollars today. By focusing on the lack of cash value and the temporary nature of the contract, you will navigate the term insurance questions on the national exam with confidence.